Hello and welcome to ABG Sundal Collier's Investor Days. My name is Benjamin Walsett. I am an equity research analyst covering the retail space, working out of the Stockholm office. With me today, I have Martin Gallagher, CEO of FM Mattsson Group. It's a company I believe you all know very well. You should have used their products today, actually. So without further ado, Martin, please go ahead.
Thanks, Benjamin. I'm delighted to be here. Unfortunately, not in person because I've been ill this week. But great that I can attend digitally. As Benjamin said, I'm Martin. I'm actually the CFO for the FM Mattsson Group. So I'm based in Mora. But I come from Scotland originally, and for some reason, lots of people say it feels very secure to have a Scot in charge of finance at the business, and also meant that I was pleased when I was asked to speak English today. So I've been with the business 5 years now. My background before I moved to Sweden was primarily in M&A, which I've been able to use in the 3 acquisitions which we've made in my time with the group. So if we can move on to the next slide. Start with our vision, which is all about our customers. We want to be the first choice for customers in the bathroom, kitchen, and beyond. And beyond because our background is working with taps, which are primarily in the bathroom and kitchen, but we're also looking for new opportunities to expand our offering. We can move on again. And here we have a slide which, as Benjamin mentioned, shows products which most of you, if not all of you, will have used today. Taps and showers, which are the core of our business. But I think this picture also illustrates a bit of the trend in the industry in recent years, where it's no longer just about having functional, sustainable products. It's also about interior design. These products are seen as the aesthetics are very important. If we move on to our KPIs. So these are for last year. We now have over 500 employees in the group across the 11 countries where we have employees. And we're at 1.8 billion Swedish kroner in revenue. Moving ever closer to the 2 billion mark. A particularly important KPI for us in recent years during the pandemic, with all the effects it's had, has been looking at the health of our employees, and so we measure healthy attendance, and are pleased that we managed to keep it up in challenging times last year to 95%. Then the next slide is about our history. We are we're a very well-established business which has been around for more than 150 years now. Started by Frost Mattsson in Mora in 1865, and for a lot of the history of the business, there were 2 competing companies from the same family, Frost Mattsons, with the FM Mattsson business and Mora Amateur, which were across the road from each other, but are now part of the same group. But that competition drove a lot of innovation over the years, and a proud history of innovation, being first with a number of features, and always having had sustainability as a key differentiator, even if it wasn't, the term wasn't so widely used back in the last century. But then the most recent years, the development has really increased in terms of internationalization outside the Nordic markets, with acquisitions, 4 acquisitions since 2014, and we also listed on the Nasdaq Stockholm Stock Exchange in 2017. Yeah, if we move on again, yeah, our focus is really on having very strong brands which have a clear position and are attractive to our customers. And these are the main brands which we have within the group. So the start with the Swedish brands, Mora Amateur and Mattsson, which I talked about having competed with each other in Mora in the past, and they're comfortably the leading brands in Sweden still these days, that have each have a slightly different focus. Say all of our brands are in the medium to lower premium segment, but do have different characteristics. Mora, more about the designer products, aesthetics, being attractive to both consumers and professionals, whereas Mattsson very much focused on the technical innovation, functionality, reliability, we call the professional's choice. But as I said, we've expanded through acquisition in recent times, and the first stage on that journey was the acquisition of the brand Detta, which is a Danish brand, Danish design, and really attractive aesthetic products, but at an affordable price point, where so they're accessible to everybody. Then we've got Hot Bath, which we acquired 3 years ago. Really beautiful products. The business has built itself in the Netherlands and is the market leader there in terms of the retail market, sales through bathroom showrooms, but is now expanding into new markets and countries. So we've also got an export organization with our sales in quite a lot of countries, but there's places far afield as Israel and New Zealand, which are actually the largest export customers, but also establishing the business in places like France, Spain, Belgium, some big markets as well. And we're expanding beyond the retail side, more into the project market as well. And then just at the beginning of last year, we made an acquisition in the UK, Northern Irish-based business with 2 brands, Aquala and Adamses. Aquala is a much more modern brand, established 11 years ago this month, whereas Adamses is from the 1880, almost as old as the Mattsson brand. And if we say the first 5 brands here are primarily focused on taps and showers, but with Aquala having some other products like mirrors, towel heaters. But Adams is particularly exciting acquisition because it's new product categories, such as baths and wash basins, and some of those new product categories that we've now launched under other brands, mainly Mora in the Nordic markets, where baths, wash basins, mirrors are now available as part of our product range. And if we go on to the next slide, talk a bit about how the operations and our geographic coverage looks. So we work very much in a decentralized way with what we call brand hubs, where there's real local management team driving ownership of the brand organizations. Things like product development, marketing strategy, what to have in the range. So more in Sweden, we have the More and Mattsson brand hub. We also have the factory there, where we manufacture the vast majority of the products which we sell under those brands, as well as a number of products for our other brands, the Demix and Hot Bath, as it stands at the moment. And with the changes and challenges in the market in recent years, we can see that there's better conditions to be both cost competitive, but also to it's really visible to customers what the value is of manufacturing products locally with lower lead times, less uncertainty in the supply chain, and political factors as well. So we see the opportunity to expand the range of products which we can manufacture ourselves in Mora, which is the only real manufacturing site within the group. Then Demixa, we've got the head office in Odense in Denmark, and with Hot Bath, we've got two main offices, one in the Netherlands, which is our primary sales market, but the majority of the products are sourced from suppliers in Italy. So we also have an office there working with engineering and quality control and making sure the supply process works smoothly, as well as being our export sales office. So other than for the Benelux market, Hot Bath sales are made from the sales team in Italy. And then Aqualanda Dams, as I talked about, it's based in Northern Ireland. We've got a really good market share in Northern Ireland and Republic of Ireland, but the rest of GB is a less mature market where we see a lot of potential for growth, and we've really invested in the sales team there, and see that as the main growth opportunity for the business over the coming years. And summarising the business and what I think makes it attractive. And sorry, we need to click through this slide one at a time. We are the market leader in the Nordic market. Really strong, long-standing relationships with customers here, both in terms of likes of wholesalers that purchase directly from us, and installers, architects, retailers, and even are well known by consumers. We do have a wide innovative product portfolio and really strong brands. We've grown our international presence in profitable niches. So if we look back just 3 or 4 years before the acquisition of Hot Bath, we were very much focused on the Nordic market with over 90% of our sales here. Whereas now, what we call the international market outside Nordics is around 40% of the sales. So it's a much better balance to the group. and we see it in challenging times like these, that there are different characteristics in different markets. So it spreads our risk, and there's really exciting growth trajectory, and the niche position of our international businesses has helped us to increase the profitability in the group. So we see potential for continued profitable growth and further acquisitions, since we've got a very strong balance sheet. When we look at the strategy for the group, we work with 4 cornerstones throughout the group, which really shows what we should be focusing on. And the customers are really in focus. So we talk a lot about our customer experience and offering something to customers which gives them a wow feeling, which means we exceed their expectations and make it clear to them why we should be their first choice. Also extremely important to work with our people and our culture. And we have some core values which we use throughout the group. Again, with the customer in focus, customer comes first, but we also say, I step forward and we win together. So we make sure that everybody knows they can contribute to the business, and we work as a team throughout the group, and get the benefit of being part of that group at the same time as we can make decisions and locally, and have the real passion for our brands locally. Efficiency is another cornerstone. So it speaks for itself. We're always looking to see how can we be as efficient as possible in creating customer value, managing costs, and being as focused as we can. And sustainability, as I mentioned earlier, has always been a core focus of the group, and particularly important at the moment, where there's so much more awareness of it amongst customers, and with the pandemic and energy shortages in recent times, our products have particularly attractive characteristics for customers. So we have a lot of touch-free products, which are both good from a hygiene perspective. You don't have to touch them, less risk of spreading germs, but also make a really big difference to how much energy is used in heating water, and how much water is used, which is an increasingly important area. And we have some other products which help to clean the water, both are connected to our taps and also through a recent acquisition which we made in the water cleansing sector. So that's the strategy for the group. If we move on to the current market situation, as everybody's aware of, it's challenging times for a lot of industries at the moment. And as I said, we've seen slightly different market conditions in different markets, but I think overall it's clear that there is lower demand in the market than there has been in recent times, and that effect has been exaggerated by the fact that the pandemic did lead to a lot of extra spend and renovation, which was beneficial for our business in terms of demand. So you've got that dropping off at the same time as there's high inflation and less disposable income. and people being more cost restrictive. So yeah, there's no doubt that is affecting demand for the business, but say we also see opportunities with things like the energy saving products that I was talking about, which are even more important to customers at the moment. We go on to the next slide and talk about how we're combating the market conditions. We have, of course, been working on efficiency, manufacturing as efficiently as we can, and working with suppliers to see where we can make savings in our products. We've also increased our products and been able to match our cost increases with price increases. We've made a number of price increases a little bit close together than we normally do, so some of the cost increases came before the price increases, but I think we're just about caught up on those now. And in terms of how we work, we're making sure that we focus on the activities which generate the most value for the business. And we're looking at our inventory level, similarly to lots of other businesses. When we've had long lead times from suppliers for those finished products we buy or for components, we have increased the amount that we've ordered. And then as those lead times have come down, we've had more in inventory than we normally would, and we require if we've got reliable lead times. So now there's a much more stable situation. We'll be working over the coming quarters to make sure we optimize the inventory level. But it has had some impact on our cash flow, working capital this year. We move on again to one recent exciting step we made. So in October, we acquired a business called Aktier, which is based in Palma and offers water analysis and water purification solutions, such as water filters for people with private wells, but also water treatment for industrial businesses. It's a small business, 16 million Swedish kronor in turnover, only 6 employees, but we see a big opportunity working with the strong Mattsson brand, which has some crossover with the customers, to grow the business. It is quite a fragmented market with quite a lot of small players on a similar scale. So there's possibly an opportunity to make further acquisitions or to just organically establish ourselves as the leading player in that market, given the strength of our brand. The business, a lot of the sales are within the local region at the moment. So just in terms of rolling it out to the rest of Sweden and then to other countries where there's a demand for that type of products and service, we see a lot of potential for growth. And it's a clear niche sustainability offering. So in line with our strategy to continue that part of our business. Well, we can look at some figures now. Here's the year-to-date figures to our latest report for third quarter in September. And over that period, we've grown by 10%, 5% of which is organic. Some is acquisition as well. So said, I talked about inflation and cost increases. So we have seen a bit of a decrease in gross profit, but with the price increases we've agreed with our customers, we are expecting that to get back up to the same sort of level as we had last year going forward. And if we look at EBITDA margin, we have also seen a slight reduction this year. In addition to gross profit, we've invested more in sales and marketing, partly because of the pandemic being over, where our ability to travel and do certain activities was reduced. But also just making sure we're investing in the growth of the business and future sales. If we look at this slide, this graph shows two things: the growth of the business over recent years. So you can see there's significant sales growth each year, and we've had a really strong cash flow for most of that period, which has allowed us to make those acquisitions, funding them through cash in the business. We don't have any external bank debt at the moment. The cash flow isn't as positive for this year, primarily due to the inventory situation. But so we will be returning it to more normal levels. So we expect to see a much stronger cash flow again going forward, as we have consistently in the past. And one more slide around the numbers. Here are the financial targets which our board have set that we work towards, and those are organic revenue growth, so excluding acquisitions and currency effects, to be 5% per year over an economic cycle, and we've been well over that in recent years, and year to date are in line with it. So good result. EBITDA percentage is historically we had a target of 10%, but we increased it to 15% at the beginning of this year, following the increase in profitability which we've achieved in recent years, which is partly down to the nature of the niche businesses which we've acquired, which have a really high level of profitability, but also in terms of working with our offering on premium products which customers are prepared to pay something extra for. So we see that as a 15% sustainable level, and we are still above it for the last 12 months, 16%. We've also been able to pay out high and growing dividends in recent years, and we aim to pay out about 50% of our profits for profit before tax as a dividend. And our equity ratio, leaving that at above 40%, and it is well above 40%. It's close to 55% at the moment. Summarizing the current position, we do see a tougher economic climate, and it is affecting sales and has affected margins. But we're actively working to compensate for the lower demand by being more efficient and focused, and with the price increases we talked about. And with our latest acquisition, Aquainvent, we've got new opportunity to expand, leverage the strength of the existing business and brands, and increase further our focus on sustainability. And this is just the slide which I've already been through, but to leave you, I'm not going to talk about it again, but leave you with the summary of why I think it's such a strong business.
Perfect. Thank you very much, Martin. I have just a couple of questions for you as well before we round off. So first off, you mentioned your different brands having different geographic exposures, and you framed it as an advantage. Is it possible to talk a bit more about the differences between geographic segment or geographic or geographics right now in tough times, please?
Yeah, certainly. I think I talked about the Nordic market and the international market, and yeah, I think our business looks quite different in the two of those. With the Nordic business, which is primarily the Mattsson, more amateur, and the Tamixa brands, the majority of our sales is more business to business rather than business to retailer. And when we say business to business, it's a lot of projects. Some of them are construction projects, but above all, it's still renovation. But things like housing associations, which have a lot of properties, which they need to keep up to a good standard. So yeah, that's a big difference from the international market, where the majority of our sales is to retailers and ultimately to consumers, and where businesses like the Aquala Adamses and Hot Bath have found a clear position, working very closely with bathroom showrooms, having relatively little online sales, which can affect the margin of our customers when they're reselling our products, and affect the value in the brand if products are discounted online. We do have some products online, but we've managed to maintain a good price point. So yeah, that's different in the dynamics between the two main markets. And then if we talk about how they've been affected by the economic position, the biggest effect and the earliest effect we've seen has been in Denmark and Sweden, which are our biggest markets for the Nordic brands. And I think it is a combination of, to an extent, consumer demand, because we do have retail sales as well. Definitely a slowdown in terms of new construction projects. But historically, what we've seen is that when there's less new construction, there's more renovation, and to an extent, the market in terms of installer capacity is limited. So if installers aren't working on new projects, then they're working more on renovation, and the margin in that is generally slightly higher, and it's somewhere where it's less price sensitive. So we're able to compete on the strength of our brand, rather than in some construction projects, customers focusing more on price. So historically, it's been beneficial for us when there's been recession, and we're hoping that we will see that over the coming year. It's difficult to assess at the moment, and it's also impacted by the same thing that we've seen with having a higher inventory level. Our customers and our customers have more inventory and have been during recent months reducing those levels. So that certainly affected sales in the short term, but should be a one-off effect. So yeah, we're certainly expecting lower volume than we've had during the pandemic next year, but that it should bounce back to an extent after a particularly difficult time towards the end of this year. And then in the more retail sectors, I think from the UK is last to be affected. Netherlands was affected after Sweden and Denmark. But there is, we are definitely seeing a reduction in footfall in showrooms, and that is to affect sales. What's good for us there is, so I talked about with Hot Bath, we're expanding into new markets, both geographically and beyond retail. And with GB not being a mature market for Aquala and Adamsas, there's plenty of potential to continue to grow despite challenging market conditions and or the risk that in the likes of Ireland, where we do have such a high market share, we can see some reduction in sales.
Perfect. You sound rather optimistic, I must say. It is now time to wrap up. So I would like to thank you, Martin, for your attendance, and all of you in attendance as well. Thank you very much.
Oh, thank you.